Bitcoin.
Bitcoin. Bitcoin.
Bitcoin. With the price of Bitcoin ripping to new highs, the question of where it will top out this cycle is back in focus. In recent weeks, prominent forecasters have raised their predictions amid increasingly bullish market conditions. Today, we're putting some of the most bullish predictions under the microscope to find out how persuasive their arguments really are, and whether these new eye-watering targets aren't just one big top signal. My name is Nick, and if you hold Bitcoin, this is a video you can't afford to miss. Before I start reeling off price predictions, let's begin with a little market context to ground our analysis. On May 21st, Bitcoin rallied to $110,797, breaking the previous all-time high of $109,588 set on January 20th, Trump's inauguration day. The next day, it raced even higher to within a sneezing distance of $112,000, leaving us with a new all-time high of $111,980 at the time of making this video. It seems like just yesterday we were all lamenting what a miserable Q1 it had been for crypto's prices. But lo and behold, just 1 week into Q2 and the bottom was in and it was off to the races again, at least for Bitcoin. Bitcoin's price formed a local bottom around $74,500 in early April at the height of the US-China trade war, and since then, the chart has looked like a big, beautiful staircase heading to the moon. Fingers crossed we won't be taking the elevator down anytime soon. Anyways, as it stands, sidelined traders and altcoin pickers have been watching in disbelief as Bitcoin rallied by more than 50% in just 6 weeks, outpacing the more modest recovery seen in most other cryptos. Despite rallying from their April bottom, few altcoins, if any, are near their all-time highs as of late May. ETH and Sol, for example, both rallied 97%, but remain far below the dizzying highs they saw in January. And in ETH's case, that also applies to January 2022, but let's not beat someone when they're down. Anyhow, you know what that means for the crypto market. Bitcoin dominance is still climbing. It's been rising non-stop since August of 2022, with only the slightest of hiccups along the way. In November 2024, for example, Bitcoin dominance slipped by a little under 5%, giving altcoins a chance to catch their breath for a few weeks before the punishment resumed. And resume it did. Now, since December, Bitcoin dominance has actually been rising even faster. It hit 65% in May, a level not seen since 2021. Now, for context, Bitcoin dominance hit almost 74% in January 2021, before plunging quite suddenly to below 40% by the end of April 2021. And this period was the historic alt season when the price of most altcoins seemed to multiply several times over in just a few weeks. Alt season is a topic for another video, but Bitcoin dominance watchers will no doubt be keeping a close eye on the under 60s to 70% region. God help us if that level is ever flipped into support and Bitcoin dominance starts heading towards 100%. Just kidding, I think. So, all in all, Bitcoin is showing tremendous strength again, and this has got all of us asking questions about how high it could climb, whether the top is already in, or if we could be looking at Bitcoin's new price floor. I know that last one might sound a bit crazy, but look at what happened when Bitcoin flipped $10,000 in late 2020. It 5x'd over the next 7 months, and a 4-figure Bitcoin was never seen again. And that sounds like an exciting analog for where we are today, now quite comfortably above $100,000. But, on the other hand, the market structure of today is completely different to the accumulation phase that preceded the 2020 to 2021 bull run. Bitcoin has been rallying for the last 2.5 years now. It is already up 623% from the bottom of nearly $15,000 reached in late 2022. So, how much more gas can we expect there to be in this tank? Before we answer that question, though, I have a question for you. Are you sure you subscribe to the channel? That's because we've noticed at least 34% of the people who watch these videos are not subscribed. So, if that's you, you can change that right now by hitting that subscribe button. You may as well hit that like button as well, just for good measure. Back to the video. In terms of how much gas is in the tank, well, The answer is plenty, depending on who you ask and where you look. Extraordinary things have been happening on the Deribit Options Exchange, where a call option expiring on June 27th with a strike price of, get this, $300,000 has become the most popular bet in the market for the all-important quarterly expiry. If you're not familiar how options work, a call option just means that traders are betting that Bitcoin will be above 300K at the end of June. Yes, this June. People are paying good money to bet that Bitcoin will triple in value, reaching a market cap of $6 trillion, almost twice that of the largest company in the world by market cap, Microsoft, in like 3 to 4 weeks. CoinDesk has quite rightly described this crazy bet as being akin to a lottery ticket because, as far as we can tell, there is nothing on the horizon in terms of macroeconomic factors or technical analysis that points to this being a likely outcome. Will Bitcoin hit $300,000 one day? Sure, why not? Some perfectly sensible people think it'll happen sooner rather than later too. And these include practitioners of the Elliott wave theory, some of whom are convinced that we're approaching the fifth and final wave extension of what is potentially a supercycle that began in the 2010s. In these circles, it's not controversial to predict Bitcoin cracking well above $200,000 or even $300,000 by the end of this cycle, by which they typically mean within a matter of months rather than years. But 3 to 4 weeks? Well, that's a new one. So what's going on over at Deribit? Well, either these options buyers know something we don't, or someone is trying to incite some FOMO by conspicuously buying up calls with outrageous upside targets. Or, more likely, people are getting carried away with the excitement of the bull market and just gambling here. Marcus Thielen, founder of 10x Research, thinks the options market is giving us an obvious top signal. Quote, Bitcoin skew, measuring the difference in implied volatility between puts and calls, has dropped to nearly minus 10%, indicating calls are pricing in significantly more volatility than puts. This suggests traders are aggressively chasing upside rather than hedging downside risk. In our experience, such extreme skew levels often reflect peak bullish sentiment, a classic contrarian signal. This sounds all too familiar. Bull markets tend to top out precisely when everyone has been convinced that their targets aren't nearly high enough. We are reminded of that one Citi analyst who said in November 2020 that Bitcoin would reach $318,000 by the end of 2022. Bitcoin famously did not do that and instead closed that year at $16,500. But hey, what's $301,500 between friends, eh? On the other hand, does a little silliness in the options market mean it's all over for this cycle? I tend to think not. Similarly, forecasters raising their targets isn't necessarily a symptom of irrational exuberance. Revising your targets to reflect the latest available information is just common sense. And that's exactly what we have seen more recently. Prominent bulls raising their targets. The question is, on what grounds are they making these predictions, and how persuasive is their case? And moreover, do they stand to benefit financially if they make headline-grabbing price predictions and people FOMO into the market as a result? The answer to that last question is usually yes. But this is complicated somewhat because that doesn't necessarily mean their prediction was made in bad faith or poorly formulated. And with enough FOMO buying, eye-watering predictions may become self-fulfilling prophecies. Still, if the people making very bullish price predictions are whales of some description, you might want to take their targets with a pinch of salt.
Oh, I didn't see you there. Well, now that I've got you, I may as well let you know about the Coin Bureau deals page. It's over there where you'll get $100,000 sign-up bonuses on the best exchanges in crypto, as well as 60% trading fee discounts on said exchanges. And you can also get discounts on hardware wallets. All of that in the Coin Bureau deals page down below in the description. Now you go back to the video, I'm going back to chillaxing.
With that said, it's time to scrutinize some concrete predictions. And we'll begin with Standard Chartered, whose head of digital asset research, Jeff Kendrick, has predicted an optimistic but increasingly common prediction of $200,000 by the end of 2025. Now, for context, Standard Chartered is an enormous global retail bank founded in the 19th century that held some $850 billion in assets under management at the end of last year. Big, old institutions like this one tend to be more conservative in general. So, there is an element of TradFi brand prestige behind Kenrick's price predictions. He predicted in 2023 that Bitcoin would reach 120,000 in 2024. This didn't come to pass, as Bitcoin reached a little above $108,000 in December last year. But it was only about 11% off. Now, depending on your perspective, 11% could be pretty wide off the mark, but we've seen much worse misses in our time, like that guy from Citi. In April, Kenrick extended the horizon of his 120K target to Q2 2025. At the time of making this video, that is 1 month and just 7 percentage points away from Bitcoin's new all-time high. So it's very possible that this will happen. However, in May, he decided that he was simply not bullish enough and issued a price prediction of $200,000 by the end of 2025, with a further target of $500,000 by 2028 or 2029. He argues that accumulation by whales and, quote, strategic reallocation away from US assets will be major drivers of a rally towards 200K by the end of the year, and the idea of TradFi institutions de-risking from US government bonds by buying Bitcoin would have sounded fanciful just 2 or 3 years ago, but some say it's already happening. Speaking of which, Kenrick says that the market, quote, is now all about flows, and flows are coming in many forms. He's not wrong, as ETF flows and institutional adoption are materializing faster than even many bulls had anticipated. The US spot Bitcoin ETFs are about to close May with the third highest monthly inflows on record, likely above the current level of around $5.8 billion. According to crypto asset manager CoinShares, $2.9 billion of these inflows were recorded in a single week, and that's 25% of their total ETF inflow this year, which is actually quite mind-boggling when you think about it. Kenrick also points to inflows from the Abu Dhabi Sovereign Wealth Fund buying BlackRock's IBIT Bitcoin ETF and the Swiss National Bank buying shares of Michael Saylor's strategy. Of course, buying shares of IBIT or MSTR is just handing BlackRock or Michael Saylor money to buy more Bitcoin with. Meanwhile, Saylor's strategy has now accumulated more than 580,000 BTC, or approximately 3% of the total supply. Its purchases have slowed somewhat in recent months, and one of the reasons is reportedly because of the increasing number of companies deciding to follow his playbook. New findings published by K33 Research count more than 70 publicly traded companies that have now joined the corporate treasury accumulation race. Saylor's lead may look unassailable now, but there is a new corporate Bitcoin treasury announced every week that is out to give him a run for his sats. Notable entrants include GameStop, which just spent $500 million to buy 4,710 Bitcoin, 21, a new joint venture between Tether, SoftBank, and Cantor, and Nakamoto, recently founded by David Bailey, a crypto advisor to US President Donald Trump. And who could forget Trump Media and Technology Group? Trump's own company also recently launched a corporate Bitcoin treasury strategy backed by $2.5 billion in private placement from around 50 institutional investors. And these new entrants join the likes of Metaplanet, Semler Scientific, and Cooler Technology Group as both disciples and competitors of Saylor's strategy. Now, all of this competition is perhaps pretty bad news for Saylor, but it's incredibly bullish for the price of Bitcoin. There are companies popping up left, right, and center with the sole purpose of buying and holding Bitcoin at a time when a single coin costs more than $100,000. Saylor's playbook is notoriously price elastic, as buying when prices are high is a feature rather than a bug in his strategy. Anyhow, next up is Bitwise, which has stuck to a target of $200,000 for 2025 since last December, along with a longer-term price prediction of $1 million by 2029. Like Standard Chartered, Bitwise's thesis rests on sustained institutional inflows and growing concerns over sovereign credit risk. Bitwise CEO Hunter Horsley believes that this year is a tipping point for Bitcoin as a mainstream macroeconomic asset, with the regulatory reset in the US facilitating massive institutional capital entry. Specifically, he envisions a scenario where wealth managers overseeing an estimated $30 to $60 trillion in assets make just a 1% allocation to Bitcoin. Now, that's a modest allocation for them, but hundreds of billions of dollars of inflows into Bitcoin. Meanwhile, Bitwise's head of European research, Andrei Dragosh, takes a global view of sovereign debt as a driver of Bitcoin's growth. He cites a model that values Bitcoin based on the default probability of a basket of G20 sovereign bonds, which already indicates a value of Bitcoin of above $200,000. Of course, when it comes to eye-watering sovereign debt, the US is undefeated. Debt growth is only accelerating, and the US government is very likely going to keep printing more money to pay existing creditors and issue new debt to keep the lights on. This will devalue the dollar, and since Bitcoin is generally measured in US dollars, that's good news for Bitcoin holders. As Bitwise's chief investment officer Matt Hogan puts it, quote, "Dollar down equals Bitcoin up." At the time of making this video, the US dollar index is down 11% since the start of the year. The dollar has been given a helping hand on the way down by the White House, which is fudding its status as the global reserve currency. Hogan noted in an April blog post that the Trump administration's trade objectives call for a, quote, weaker dollar, even if it means ending its role as the world's reserve currency. He cites a recent speech by Stephen Moran, the head of Trump's White House Council of Economic Advisors, that tore into the dollar's reserve status as causing, quote, persistent currency distortions and unsustainable trade deficits that have decimated US manufacturing. But it's Horsley who spells out the long-term big picture here. He envisions a scenario in which Bitcoin emerges as a digital alternative to the US dollar and treasuries, propelling its market cap to $50 trillion. He hasn't put a date on this, but it indicates a Bitcoin price of around $2.4 million a coin, a very large increase over Bitwise's 2029 target of $1 million. Incidentally, Cathie Wood's ARK Invest recently raised its Bitcoin bull case for 2030 from $1.5 million to $2.4 million. This projection implies a compound growth rate of 58% over the next 5 years and assumes that 60% of the capital currently invested into gold will flow into Bitcoin, plus $13 trillion in spot Bitcoin ETF inflows by 2030. For reference, the total inflows recorded since the launch of the spot Bitcoin ETFs in January 2024 is around $134 billion, which is around 1% of $13 trillion. ARK and Cathie Wood are famous for their incorrigibly bullish outlook, and, as usual, they are counting on a parabolic adoption curve just around the corner. They do have some form here, as in 2021 they predicted that Bitcoin would reach $500,000 by 2026. A prediction that could easily go the way of that one made by the Citi analyst if 2026 brings the next bear market. Moving on to another big name in the crypto industry, Arthur Hayes, founder of the BitMEX exchange, pioneer of the perpetual futures contract, and chief investment officer of Maelstrom. He predicted in an April blog post that Bitcoin could touch $250,000 by the end of the year if the Federal Reserve pivots to quantitative easing, aka money printing. Hayes wrote, quote, Bitcoin trades solely based on the market expectation for the future supply of fiat. He believes that the Fed is in the middle of such a pivot too. On April 1st, Federal Reserve Chair Jerome Powell indicated that the Fed would slow down how quickly it's letting treasuries roll off its balance sheet, cutting the cap from $25 billion to $5 billion per month, while maintaining the existing cap of $35 billion for mortgage-backed securities. Importantly, he also added that excess principal payments received from mortgage-backed securities may be reinvested into treasuries. Hayes' interpretation of this is that the Fed is mathematically keeping its balance sheet constant while at the same time engaging in treasury money printing. His conclusion? Quote, Bitcoin will scream higher once this is formally announced. Now, we certainly wouldn't mind seeing that happening, although $250,000 is seriously pushing into highly optimistic territory. It's a target shared by Robert Kiyosaki, the best-selling personal finance author, businessman, and Bitcoin enthusiast. His prediction is based on the imminent collapse of what he calls, quote, the Marxist central bank system, a description that would baffle Marxists and central bankers alike. As Kiyosaki recently put it, the, quote, system is crashing. Many go in bankrupt. Keep hodling. I am buying more Bitcoin. I predict Bitcoin climbs to 250K this year. Buy more. Do not sell. Open your eyes and open your mind and listen to people like Raoul Pal, Michael Saylor, Anthony Pompliano, and many others. I'm reminded of the peak of the 2021 bull run when Michael Saylor urged his followers to mortgage their house to buy more Bitcoin and to never sell it under any circumstances. The price of Bitcoin fell from $69,000 to $15,000 over the following 12 months. There's a lesson in that. Be very careful about the kind of people to whom you open your eyes and open your mind to. We don't know what Bitcoin is going to do by the end of 2025, but what we can tell you is that risk management is the only way to stay alive in crypto. The higher the price goes, the more exciting this market is going to feel. But this is precisely when FOMO can lead to financial ruin very quickly. Be careful out there, folks. And if you need practical advice about how to avoid getting wrecked in the crypto market, then you've got to check out our video on that right over here. And if you're not subscribed to the channel yet, you can do that right over here. This is me, Nick, signing off. Thank you very much for watching, and I'll see you again soon.